Okay, so this is Midcap Masala. On that note, let's take a look at what the broader end of the market is doing right now. Nifty largely stable, up about 0.5%, but the broader end is doing even better. The Nifty Midcap index is up 1%. The small cap index too is seeing gains of about 0.7%, so looking very good for the broader end as well. So let's start interacting with the managements from the broader end of the market. And first up, we have the management of Mars Financial Services. Joining us, we have Mr. Kamlesh Gandhi, the CMD of the company, with us on the show. Mr. Gandhi, morning and thank you so much for your time. Let's decode what your earnings have looked like this time around. And first of all, let's talk about what the asset quality has looked like. What is your asset quality outlook for Q1? If you could give us a little forward-looking sense on that front.
Good morning. So as you know that we declared our Q4 result and for the whole year on April 29th. And happy to share with you that we crossed very important milestone of 15,000 crores in AUM and also crossing 500 crores in profit before tax. And coming on the asset quality, we could maintain a very steady asset quality at around 1.70% in net stage 3 assets, despite all the headwinds that we have been witnessing since last 1.5 years, which has of late slightly stabilized. But over the years, we have maintained the quality of the assets, and this year was no different, with around 1.70% of our net NPA. And going forward, we'll be in a position to maintain the same trend that will be anywhere between 1.7 to 1.9% in our net NPAs, and we will try to be at the lower end.
All right, good to know about it. Hi, very good morning, Mr. Gandhi. This is Shrishti also joining in, but just wanted to get a sense that how has the on-ground customer repayment behavior has evolved in the recent month? If you can give us some sense over them, particularly in the most vulnerable segments.
See, as you know that we are an overhang of this war crisis. But happy to share with you that till now, the portfolio has been behaving properly. The repayments has been quite regular, while we are very cautious on extending loans to the ones who are energy dependent. So we have tightened our credit screens and risk management. But as I talk to you right now, that we see no stress on the portfolio and the repayment has been very regular.
Okay, so that's your outlook on that front. But Mr. Gandhi, if you could help us understand what could be the potential impact of the West Asia geopolitical tension on your portfolio? Any worst case impact you could help us with?
Difficult to give a number to that,
Sure.
but it's an evolving situation. But as we have demonstrated in past, even during COVID, we could maintain the quality of the portfolio. So the quality of the portfolio is the function of the macro headwinds, plus also your credit underwriting. So right from the beginning, we have been following the dictum of extending credit where it is due. We are proactive in our approach. Whenever we see such macro headwinds, we tighten our credit screens and risk management. So we think that even though if it extends, will not have a substantial impact on the portfolio. That is what I presume right now.
All right, but along with that, Mr. Gandhi, if you can give us some sense that which parts of the book have contributed the most to the recent spike in the credit cost? And is this trend likely to persist going forward?
So across the products, we have performed well in proportion to their contribution to the asset of the balance sheet. It has contributed to the credit losses also. So there is nothing to single out in terms of a single product which has contributed significantly to the increase in the credit losses. So by and large, all the products are well within the risk-adjusted return parameters. And as I told that we have been demonstrating this over last 3 decades, that we select a product where we get an required risk-adjusted return and see to that how we educate well on that front.
Okay, and also help us understand how are you seeing your overall AUM growth shaping up in the near term given the current environment that's at play, and which segments are expected to drive growth over the next few quarters, if you could help us understand.
So we are predominantly MSME funders with a varied portfolio ranging from wheels to salaried personal loans. So majority of the loans will come from majority of the assets will be contributed by our MSME segment. And as we have shared earlier also that we will, we would always strive to grow anywhere between 20 to 25%. And as I told you, this is an evolving situation. Depending upon the macros, we will take the decision on growing the AUM, prioritizing the risk management and profitability. So as I talk to you right now, we were quite optimistic for a growth of anywhere between 20 to 25% this year.
All right, that's great to know. But now, along with that, Mr. Gandhi, if you can give us some understanding that with the given near-term uncertainties, what gives you confidence in achieving your targeted ROA of 2.75 to 3%?
See, ROIs is the function of how well you manage your operational and credit cost. So as I shared with you earlier that we have always maintained the credit cost, which is always range bound, while prioritizing risk management and extending credit where it is due. And we also prioritize profitability in all our operations. So we will be having a tight control on our operational cost and the credit cost. And I see no pressures on the NIMs as far as I talk to you right now. So with all this contribution, I think we'll be in a position to maintain our ROAs anywhere between 2.75 to 2.85%.
Okay, so that is on your ROA. On that note, we'll let you go, Mr. Gandhi. Thank you so much for your time today.
Thank you.
Okay, viewers, that was the management of Mass Financial decoding their Q4 numbers and more importantly, helping us with an outlook of what to expect for Q1 FY27 and the rest of the financial year. But on that note, it's time to slip into a very short break. We'll be right back with more conversations lined up on the other side, so stay tuned.